Hey Puppy Trades, I want to do a video analysis update on Cathie Wood's corner of the market. That's right, in today's video, we're gonna really focus on these growth stocks. A lot of names in the clean energy sector, the software sector, and the crypto sector. I heard someone say recently that we're in a stock picker's market. I'm not quite sure I agree, but I do think that we're gonna see some names outperform that a lot of us may have fallen asleep on for a while, and many of them will be owned by Cathie Wood. So I'm not sure if Cathie Wood owns all of these stocks, but she owns a lot of them. The whole point, this is the growth stock video. Let's talk about some sexy stocks in this market. Let's get right into it. Here is Tesla. Tesla forms a wave 1, wave 2, and a huge wave 3, then ends an ABC correction and it puts in a wave 4 low at the 38.2% retracement. So one thing I like to say, remember the debate, okay? A lot of people, they forget the debate because there's all these fundamental news headlines. Never do that. Remember the debate that we've had as a market all summer. Okay, so what we were saying all summer about Tesla while it was in this range there were really two arguments. The most popular argument was that Tesla was completing an A, B, C correction from this high. So what the Tesla bears did is they took the length of wave A, they placed it at what they thought was the wave B high, and they were looking for a wave C down to 400. They were looking for this wave 1 high to not get broken, okay? So Tesla's broken above that wave 1 high. It's getting pretty damn close to breaking above this wave 3 high of 900. So let's talk about Tesla. It goes on a wave 1 and a wave 2, huge wave 3, and it's ended a wave 4. So I believe a wave 5 is in progress. The length of wave 3 placed at the wave 4 low gives Tesla a conservative wave 5 target of around 1370. So I keep saying that 1370 is conservative for a few reasons, okay? One, Tesla's been on the bar chart, straddle, and strangle screener all summer, okay? So this screener, it's not a magic screener, but I took this picture in July, and what we've generally found is that these stocks, they have very low implied volatility, and they're being accrued with a lot of open interest. So it's kind of a smart money indicator. I don't think it's ever a good idea to use low implied volatility or something like that as evidence that a stock is gonna go up. But I do think it's very useful to use low implied volatility and the bar chart, straddle, and strangle screener as evidence that a stock is going to have a large move. So I'm pretty sure I have a picture where Tesla's actually on every single slot, but this one's from July 20th. Tesla's taking up a lot of space on this screener. So we knew Tesla was going to have a large move. What Tesla could be is that that's not a wave 3 and that's not a wave 4. It's another wave 1 and another wave 2. Okay, this is a very aggressive view, but it's certainly possible that this is a wave 3 in progress and that the minimum target is 1368. From there, we'd have a shallow wave 4 correction and a wave 5 higher. I'm going to stick with, for now, the more conservative view. But that's kind of one message of this video, is that a lot of what I say is conservative, and we'll get to that point later in the video. But for now, I think Tesla is a huge wave 5 in progress. The next wave 5 target is 1378. That's what I would call, 1368. That's what I would call the destination. Okay, the path is the smaller degree how we're gonna get there. I think the path is that this is a wave 1 and a wave 2. This is a big wave 3 in progress. We'll have a shallow wave 4 correction and go on a wave 5 higher. Now, one thing I want to do with Tesla is actually go look at the daily chart. I want to talk about something that I think is pretty interesting. So if we turn on the Ichimoku cloud on the daily chart for Tesla, we can see it's got a pretty nice track record recently. There's only been 3 Ichimoku cloud breakouts on Tesla's daily chart in the past 2 years, okay? One of them was April 23rd, 2020, right? So this was a huge buy signal just from the Ichimoku cloud. And if someone hypothetically had just kind of turned off all the noise and just traded based on the Ichimoku cloud, they would have caught this entire rally for Tesla, a pretty historic one and certainly a very profitable one, okay? That's one very recent Ichimoku cloud breakout. The next one is from October of 2019, before Tesla almost quadruples during kind of that melt up that preceded the March crash of 2020. But this is an Ichimoku cloud breakout. Tesla triples and quadruples. This is an Ichimoku cloud breakout where Tesla goes on one of the most historic runs for a stock ever. And then now we're breaking out of the Ichimoku cloud right now. The reason that I bring this up is because it's pretty likely, in my opinion, that at some point early into 2022, we're going to see Tesla beyond 1370. And the Ichimoku cloud on the daily chart might be our best indicator as to exactly how far the uptrend could go beyond 1370. Okay, so that's Tesla, that's the Ichimoku Cloud. We're getting some objective views right now that Tesla's ready to fly. It's certainly in an objective uptrend. So let's talk about NIO right now. NIO completes an ABC correction and it's actually lagging Tesla. So normally NIO and Tesla move together. So maybe that trend will just never happen again, or maybe NIO's just kind of lagging Tesla a little bit. I'm pretty sure that's what's going on. This is a wave one, an ABC correction putting in a wave too low. So Tesla's exploding right now. I think that NIO is going to play follow the leader. This is kind of a sister trade that we've seen play out a lot in history. So this is a wave one and an ABC correction putting in a wave two at the 78.6% retracement. So right now, just this kind of count from this low in May is invalidated if we go below 30. I don't think NIO will go below 30. I think this is a wave one and a wave two that ended at the 78.6% retracement. NIO is going to go on a wave three that takes it to 70 before a shallow wave four correction and a wave five higher. So the wave three target is the 161.8% extension of wave one before we have a shallow wave four correction and a wave five higher. I'm expecting a pretty big rally from a lot of the Chinese EV names, which we're about to go over. And I think that's going to happen a lot more quickly than people think. And I think it's going to be a lot more explosive than people think, but I'm expecting a huge rally for NIO that will take it to 70 at least before a shallow wave four correction and a wave five higher. Let's look at some of these other Chinese EV names because it's not going to be just NIO, just like it's not probably going to be just Tesla. On the bigger picture, XPEV is something that I've always liked in the long term, but it's starting to actually firm up in the short term as well, that this is a monster wave one for XPEV and an ABC correction putting in a huge wave too low. So the length of wave one placed at the wave too low should take XPEV to 80. Okay, and now I would consider that the destination. So I've owned XPEV for a little bit, and I've been waiting for the length of wave one placed at the wave too low to take XPEV to 80 before it kind of forms a cup and handle. It'll have a shallow kind of sideways wave four that looks like that kind of classic wave four bull flag before we go on a wave five higher. Now, that's just in the bigger degree. In the smaller degree, I think we may have a path how we're going to get there. This could be a wave one and an ABC correction that's ending a wave two right around the 50% retracement. So the ABC correction is really clear on Li Auto. For XPEV, if we're above 32 with maybe 28 being a little wider of an invalidation because this has a high beta, this is very likely a wave one and a wave two. And even in the short term, XPEV could be getting ready for a wave three that takes it all the way to 63 before a shallow wave four correction and a wave five higher. So I'd be looking for, if we held above 32 to 28, that XPEV goes on a rally to 63. I think this would happen during, if not by the end of the first quarter. Then we see a shallow wave four correction and a wave five higher. It's very likely that XPEV, Li Auto, and NIO will all move together in the Chinese EV sector and also in the kind of the clean energy solar sector, which we're also about to talk about. But I think NIO, XPEV, and Li Auto, all three of these are the exact same message. A big old wave three, should be expected. And one thing I want to do in this video is kind of talk about some of these smaller names. We'll talk about why towards the end. But this is Li Auto right now. We have a huge wave one and an ABC correction putting in a big old wave two. And it's just like XPEV where it forms another wave one. And now it looks like an ABC correction putting in another wave two at the 50% retracement. So the reason that I said the correction for Li Auto was more clearly an ABC correction is because if you take the length of wave A, you place it at the wave B high, that's exactly where wave C ended. It looks like we're having a pretty big rally out of this right now. Just like Li Auto, I expect just like XPEV, I would expect wave one, wave two, wave three will take Li Auto up to 49. Okay, so 49 is that wave three target on the smaller degree before we have a shallow wave four correction and a wave five higher. So Li Auto, XPEV, and NIO all look like they're getting ready for big wave three rallies in kind of a shorter term time frame than we usually talk about. And that kind of makes sense, especially when you see that Tesla is exploding and a lot of the clean energy sector is kind of sending the exact same message. Okay, Acromoto, another smaller EV name, is an American EV name, but I think it's going to be one of those cases where small cap clean energy follows the breakout of large cap clean energy. We have a 1, 2, 3, 4, 5 huge wave one for Akimoto. Now an ABC correction that ended at exactly the 78.6% retracement. I believe that put in a large degree wave too low. So it's important to note that there's a lot of reward for Akimoto if we're above this low of 7.32. Okay, because if we're above this low of 7.32, then this is a large degree wave 2, and we're within a huge wave 3. The wave 3 target is the length of wave 1, placed at the wave 2 low. That would take Akimoto to 43 on the bigger picture. I believe that this is a wave 1 of wave 3 and wave 2 of wave 3. So we're actually about to begin wave 3 of wave 3 that should take Akimoto to around 25 before a shallow wave 4 correction and a wave 5 higher. Again, it's almost identical to what we just talked about with NEO and XPEV and Li Auto, a huge wave 3 on the large degree, but also a wave 3 on the smaller degree. I think we're going to see in the coming weeks, the coming months, this wave 3 breakout really start to take the market by storm, especially in kind of the smaller EV names, especially in the Chinese EV names. Let's look at some non-Chinese names. This is Plug. Plug Power has had some interesting news recently. It had a lot of activity in the options market, and I think we can kind of see why. This is another, in my opinion, 1, 2, 3, 4, 5 huge wave 1 and an ABC correction putting in a big old wave 2 right at the 78.6% retracement. So I think it's almost identical to what we just talked about. A huge wave 3 has begun on the larger degree, and a wave 3 likely has begun on the smaller degree as well. So if Plug Power keeps holding above that low near 17 or 18, I'll get the actual number in a second, then it's within a wave 3 on the larger degree. It's also likely within a wave 3 on the smaller degree. And the minimum target is the 161.8% extension of wave 1, which is around 46. Now, that's way too conservative in my opinion. I think that this is going to kind of explode, but it's the same message as Li Auto, XPEV, NEO, Akimoto. Now Plug Power, a wave 3 begins on the larger degree, and a wave 3 begins on the smaller degree. I think for Plug Power, this is going to be a wave 1 and a wave 2. This wave 3 target is all the way at 91. That sounds ridiculous. It's about 300, 400% higher, but I've kind of made predictions that were more ridiculous than this that have ended up playing out. And I think this is going to be another one that sounds ridiculous, but this is a huge wave 1 and a wave 2. So if we're above this low of 18.47, which is a little wide, we could probably tighten that up to 23, this low of wave 2 on the smaller degree, then Plug Power is going to explode out of this nest. In the short term, 46 is kind of that textbook wave 3 target. We'll probably go a little further than that, but I think we're going to clearly start an impulse from this low for Plug Power. It's going to begin a path to 90. It's going to take a little bit, but the first quarter, the second quarter of 2022, we could definitely see Plug Power go challenge this high and have an explosive breakout that would be even bigger, if you can believe it, than this huge rally that we've gone on previously. So that's Plug Power. It's kind of sending a wild message right now, but it's not the only one. You know, Akimoto sends a similar message. Now, I think QuantumScape, we're kind of starting to see that this was a 1, 2, 3, 4, 5 huge wave 1. And this is an A, B, C correction, putting in a big old wave 2 near the 78.6% retracement. So this is actually a little tight, but if QuantumScape is above 19, then this could be a huge wave 2 low on the larger degree. And then, as crazy as it sounds, this entire wave 1 placed at the wave 2 low is the minimum wave 3 target for QuantumScape that takes it to what sounds ridiculous, 142. Okay, so there are some pretty explosive moves getting ready across these smaller electric vehicle names, and we're seeing some large cap clean energy break out right now. So I think QuantumScape getting to 140 would have to be a kind of a multi-year target, but it's just kind of to paint the picture. Li Auto, NEO, XPEV, Akimoto, QuantumScape, Plug, all these small cap names in the clean energy sector are kind of sending an uncanny message that a monster wave 3 is about to occur. So let's look at some large cap names. I want to look at the ratio first of the solar ETF TAN to the S&P 500. I've kind of talked about this a little bit, but all this does is it measures the performance of the solar energy sector on a relative basis to the S&P 500. So a lot of traders, they're a lot more concerned with who's going to outperform SPY as, you know, more than they are whether or not SPY is going to go up or down. They want to just know, are we going to be in a sector that outperforms SPY or not? So that's where these ratio charts can be very useful. I think it's almost identical to what we talk about in kind of the absolute terms. This is a huge wave one for the ratio of the solar sector to the S&P 500. So this is a wave one, and this is a wave two ending at the 61.8% retracement. Now we're getting a reversal. I think just like in the kind of regular stock charts, this is letting us know that we're going to see a big shift in relative strength, where we're going to go from the solar stocks underperforming the S&P 500 to, you know, the clean energy stocks are going to resume their outperformance against the S&P 500, very similar to the rally that they went on from December to January. From December of 2019 to January of 2021, we saw the solar sector outperform. Then we saw the solar sector underperform. I think we're getting ready now at the 61.8% retracement to see the solar sector outperform again. So let's talk about two large cap solar energy names. And let's talk about the solar ETF, TAN, right now. So I think TAN, it's got a very interesting long-term picture, but let's just talk about the short-term picture for the solar energy sector right now. I think that TAN completes an A, B, C correction from this high that was made on January 25th. Now, First Solar, Next Era Energy, Tesla, and the solar ETF TAN all make this exact same high on January 25th. Okay, I think this is an A, B, C correction, and that from this low that the solar ETF TAN puts on May 11th, we form a wave one, and an ABC correction puts in a wave two at the 61.8% retracement. We're starting to see this kind of turn around right now. I think the 161.8% extension of wave one is likely going to be hit towards the end of this quarter for the entire solar sector ETF TAN. That means we could see a lot of clean energy stocks do very well. This is a wave one and an ABC correction putting in a wave two. It looks like the solar energy stocks are getting ready to outperform not only on a relative basis, but also on what we call an absolute basis in terms of dollar price and in terms of, you know, relative performance against the S&P 500. We're going to see the solar stocks do very well. And as long as we're above this low of 75, that's a pretty safe claim to make until we're at the 161.8% extension, which is 109 for TAN. And I think that we're going to see this by around December, January, most likely, because this wave three is going to be very powerful. It's going to be stronger and faster than this wave one. So the solar ETF TAN looks really good. Two big holdings we talk about a lot. For First Solar, I really like to just talk about the bigger picture, that this is a huge from 2012, wave one, ABC wave two. Wave one, ABC wave two. So there's really kind of only one position to take, that for the past 8 years, large institutions have been either accumulating the crap out of First Solar, or they've been distributing the crap out of First Solar, and it's getting ready to tank, okay? I think it's pretty clear that this entire range was accumulation. The big boys have a hold of this one, and they're not going to let go of it for a while, okay? That's why they accumulated it for 8 years. I think we can see why. On the smaller degree, it looks like First Solar formed a wave one and a wave two, and it's within a wave three right now. The minimum wave three target is 112. Now, First Solar actually came within $4 of breaking above the January 25th high that it formed with Tesla, with the solar energy ETF TAN, and with Next Era Energy. So a lot of clean energy names, particularly the big ones, make this exact same high on January 25th. First Solar's almost broken above it. What would that mean? Well, that would mean that we know basically for a fact that this is a huge base. Large institutions have been accumulating the hell out of First Solar, and we've been saying that since it was literally right here on March 5th. And I think that this is all a huge base. This is wave one and wave two. We're seeing a big wave three in progress, and the minimum wave three target is at least 112, and that alone would take First Solar to a new high. Once we break above this 125 high, clean energy bulls get to drink a glass of wine, because that will have proven for a fact that large institutions have been loading this stock up, okay? So if First Solar is going to explode, then it's not going to do it alone. And Enphase Energy is another one we've talked about recently on the long-term chart, how it could be a little ambiguous. But this is a huge holding of TAN. It's a huge holding of a lot of clean energy names. The conservative view of Enphase Energy is that this is a 1, 2, 3, 4, 5 on the long-term count. We're within a huge wave 5 right now. We'll get to how we count this impulse in a second. This is the conservative view that we're within a big wave 5. I actually don't even think it's the most accurate one for Enphase Energy. If we look at First Solar, we get the idea that this is a 10-year almost base breakout for the solar sector. I think that Enphase Energy is a very similar story. This is all most likely a massive wave 1. Now we're putting in a huge wave 2 that we put in May. Okay, so the point is, we don't really even have to debate in the short term what the large degree count is, because the small degree count is looking very good. Okay, so the small degree count for Enphase Energy is that from the May 11th low, it formed a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2. So we came out when Enphase Energy was at the 61.8% retracement. We were like, this looks like the kind of golden ratio of a clear impulse structure. So the length of wave 1, place of the wave 2 low, will take Enphase Energy to 240 early into 2022. We'll have a shallow wave 4 correction and go on a wave 5 higher. So the length of wave 1, place of the wave 2 low, will take Enphase Energy to 240. We'll have a shallow wave 4 correction and go on a wave 5 as high as 310. Okay, so I like Enphase Energy a lot, but I really like it as evidence that this whole sector is about to explode. So that's clean energy. Let's get into the software sector. I didn't want to start the software sector this way, but I kind of had to, okay? Because I posted a long-term video, and I stress the word, a long-term video about my favorite long-term picks, okay? So a lot of people were a little disappointed that Cloudflare wasn't on the list, but Fastly was number 1. And I think that's a little funny, okay? But someone said I was a Fastly fanboy, but until their last report. So this guy said, you know, I used to like Fastly when it was going up a lot, but now they've reported in earnings that I didn't like, so now I'm bearish when it's 60-70% off the high. Anyway, another comment, these are all in reply to a tweet that was about my top 10 long-term picks. Another comment was, why Fastly and not Cloudflare? Okay, we'll get to that in a second. And then this guy, I think this guy's telling a joke, but he said Fastly is still alive. I thought Net drank their blood, bottoms up. This guy asked me about Net again. Guys, I posted about Cloudflare when it was like super at a great buying opportunity, right? It's not really fair to ask me about Cloudflare when I posted about it before it doubled. I posted about Cloudflare in March, and then 6 or 7 months later, after it's more than doubled, you're spamming Cloudflare under a post about Fastly. That doesn't really make sense, but fine. Let's talk about Cloudflare, because I do think it's a little important. But guys, come on, don't ask me about a stock after it's more than doubled from when I posted about it. That's a little rude, okay? Don't ask me about Bitcoin when it's at 150K, okay? Don't ask me about Tesla when it's at 1,500, okay? And that's in the future, okay? That's not, you know, in the past. But Cloudflare, I've always said that was a conservative target. And that's what a lot of you guys don't get. My targets are conservative. This is a 1, 2, 3, 4, 5 wave 1 for Cloudflare. This is an ABC correction wave 2. So the length of wave 1, place of the wave 2 low, has given us a target since late March of 124. So that target was hit. Like that target, Cloudflare doubled, okay? Don't spam me about Cloudflare. That doesn't make any sense, okay? Yeah, it's gone past the price target. Too bad. This is a 1, 2, 3, 4, 5, another huge impulse. So I think it looks something like this, where this is a big wave 1, that's a big wave 2. Cloudflare just ended a huge wave 3 that was subdivided into 1, 2, 3, 4, 5 waves. It ended a wave 3, now it's put in a wave 4 low, and it's within a big old wave 5. So I don't really think buying Cloudflare at 165 when I posted about it at 72 is a great idea. Like, I hope that's not too hard to fathom why I would like Fastly a little more for the long term than Cloudflare. Anyway, I don't mean to harp on this, but come on, like, what are you doing? But anyway, sorry. Let's just get into the charts, okay? Why would I pick Fastly over Cloudflare? Let's just look at that right now. Why would I pick Fastly over Cloudflare? Because Cloudflare has exploded since March, okay? Cloudflare is in the software sector. And one thing that I think a lot of retail traders struggle with is that birds of a feather flock together. If you're rooting for advanced micro devices, then you're also rooting for NVIDIA because they're both in SMH. They're both in SOXX. They're in the same ETFs, okay? So they're going to move together. I want NVIDIA to fly even if I'm an AMD bull. Don't let any of that fundamental crap they feed you about competition, right? No, they're on the same team, guys, okay? And Fastly is on the same team as Cloudflare in the software sector. This is a 1, 2, 3, 4, 5 wave 1. An A, B, C correction ends wave 2, where the length of wave A placed at the wave B high is where wave C ended. So this is a wave 1. In my opinion, this is a wave 2. So if Fastly is above 33, the length of wave 1 placed at the wave 2 low will take it all the way to 160 before a shallow wave 4 correction and a wave 5 higher. So some guy said he was a Fastly fanboy during this time, but now he's bearish Fastly right here. That's kind of a problem with your market psychology, okay? But anyway, Fastly looks great. I think that if it holds above 33, it's got a ridiculous upside compared to Cloudflare, which is already more than doubled from when I posted about it. So, I guess that's my answer. Cloudflare has already exploded, and I think Fastly is about to explode. But let's look at the ARK Innovation ETF right now. This is looking pretty damn good. This is Cathie Wood's ETF. It completes an ABC correction, and then from this low of May 13th, it forms a wave 1 and an ABC correction put in wave 2 between the 61.8 and the 78.6% retracement. So I think ARK put in wave 2 near the 78.6% retracement. We can use that as the stop. And this is a very clear impulse for me, especially when we see the solar ETF is getting close to breaking above this high. We're going to see, if we saw XPEV break above its wave 1 high, or we saw Li Auto break above its wave 1 high, or if we saw the solar ETF or Enphase Energy break above their wave 1 highs we just went over, then we would already know that ARK is going to break above this high. Okay, this is a wave 1, and ABC correction ends wave 2. So ARK, in my opinion, is within a wave 3 that will take it all the way to 154 before a shallow wave 4 correction and a wave 5 higher. This is something I'm looking for early into 2022 for at least this wave 3. Wave 1, ABC wave 2. I think this wave 3 is in progress right now. The next target is 154 before a shallow wave 4 and a wave 5 higher. So that's the ARK ETF. Here's PayPal. I love PayPal. I love Square Cash. There's only one way, in my opinion, to count PayPal and Square Cash right now. Almost identical. They're an ABC correction from the 216 high. This is the same 216 high that ARK formed. So remember, ARK holds PayPal and Square Cash. It completes an ABC correction from this high. ARK also holds ROKU. I talk about ROKU so much. We're going to leave it out of this video, I think, for now. But this is a huge wave 1 and wave 2 for PayPal. I think this is another wave 1 and an ABC correction ends another wave 2 between the 61.8 and the 78.6% retracement. So the length of wave 1 placed at the wave 2 low will take PayPal all the way to 328. So PayPal, I'm looking for an explosive wave 3 for now. The 78.6% retracement of about 249 is a nice stop. The widest invalidation would be this wave 2 low of 233. I don't think either of those go. And I think that PayPal will go on an explosive wave 3 that is at least the length of wave 1 placed at the wave 2 low. We'll see PayPal go to 328. Now this rally is from 512 to 723. That's about 2.5 months. So it's not crazy to say 3 months, 4 months, 5 months more conservatively, we will see PayPal go on a huge wave 3 all the way to 328. And that would just be the minimum wave 3 target. We'd have a shallow wave 4 correction that will conservatively retest this wave 1 high before we go on a wave 5 higher that is at least the length of wave 1. So there's a lot of upside for PayPal. Let's talk about Square Cash right now. I think Square Cash looks very similar to PayPal. Obviously, they should look very similar, right? So are PayPal and Square Cash competing? Let's look at the chart. The charts are identical. Okay, the charts of PayPal and Square Cash are identical. They're not competing with each other, guys. They're in the same ETFs. Okay, I'm pretty sure ARKF only holds like 90% Square Cash, 90% PayPal. Okay, they're in the same ETFs. This is an A, B, C correction from the 216 high. So why are PayPal and Square Cash moving step for step if they're competing with each other? It's because they're not competing with each other. They're in the same industry. They're in the same sector. We're rooting for both. This is a wave one and an ABC correction putting in a wave two. This is another wave one and another ABC correction putting in another wave two at the 61.8% retracement. So the length of wave one placed at the wave two low gives a minimum target for wave three of 319. From there, we would expect a shallow wave 4 correction that will conservatively retest the wave 1 high. Then wave 5 would be the length of wave 1 placed at the wave 4 low. That could take PayPal as high as 385. So, sorry, that would take Square Cash as high as 385. With PayPal, they both look very good. They both look set for a wave 1, wave 2, huge wave 3. There will be at least the length of this wave 1, followed by a shallow wave 4 correction and a wave 5 higher. So I think PayPal and Square Cash, they look really good. A lot of these growth stocks look really good. I want to talk about Etsy right now. Etsy forms a wave 1 and an ABC correction puts in a wave 2. I think this is another wave 1 and another wave 2. We're going to explode into wave 3 of wave 3. So if this is wave 1 of wave 3 and wave 2 of wave 3, then wave 3 on the larger degree won't end at 247. This black wave 3 most likely is going to go way past 247. And that's kind of a big theme of this video, is that a lot of times when I post things, they're kind of immediately decried as ridiculous. And most often, yes, stop losses get hit, invalidation levels get hit. But what happens more often than not is that the price target I posted ends up being extremely conservative. Okay, this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. Etsy is about to explode into a wave 3 of a wave 3. The minimum wave 3 target, it looks like, will be 247. We'll have a shallow wave 4 correction before the length of wave 1 placed at the wave 4 low takes Etsy on a wave 5 higher as far as 287. So this is something I would expect to be complete by the end of the first quarter. Waves 3, 4, and 5. I think Etsy holds above about 201 and goes on a wave 3, 4, and 5 to the upside that ultimately takes Etsy as high as 287. I would look for that to be hit around March. Okay, so Etsy above 201, it heads to 287. That's called risk reward. It's looking good for Etsy. Pinterest, this is a crazy chart right here. This is the craziest chart. The craziest chart in this video is Pinterest. This could be wild. This is a huge, in my opinion, wave 1 from the IPO, then a big old wave 2. So we need to figure out what in God's green earth is this. Okay, the conservative view is that this is a wave 3. So this is an ABC correction that ended wave 4 at exactly the 50% retracement. So Pinterest should hold above the 61.8% retracement of 40 and go on a huge wave 5. There will be at least the length of wave 3 placed at the wave 4 low. That means that probably in the first half of 2022, we'll see Pinterest do something pretty crazy. It will replicate this entire rally placed at this low and go to 129. So as ridiculous as that sounds, that Pinterest will hold above 40 and go to 129, kind of like what I said about Cloudflare in March, that's actually conservative. Why? Because we're at the 50% retracement. So this could be another wave 1 and another wave 2. The minimum expectation is the same. The length of this rally placed at this low is the minimum target of about 129. Okay, but if this is a wave 3 of a wave 3, that's going to be the minimum wave 3 target. We'll have a shallow wave 4 correction and go on a wave 5 even higher. So Pinterest above 40, the upside is above 130. Pretty good risk reward. If you ask me, that's Pinterest. Let's talk about Fiverr. I haven't talked about Fiverr, but wow, this is a crazy one. This is a wild chart right here. There's a lot of wild charts. There's a lot of things that the counts are kind of getting ridiculous for some of these names, okay? And I think they're gonna end up being accurate, okay? Bitcoin's flying, Ethereum's flying, we could see Tesla fly. The growth stocks are about to take the market by storm. That doesn't mean people should go all in growth, but in my opinion, you'll either participate or watch from the sidelines. So This is a 1, 2, 3, 4, 5, huge wave one for Fiverr. This is an e-commerce stock, big old wave one. And this rally, I said in my post last night that this rally was 2 years. It was actually less than 2 years. So that means the projection that wave three will be complete within 2 years, in my opinion, is pretty conservative. But I think this is all a 1, 2, 3, 4, 5 wave one, and an ABC correction that's ended wave two between the 50% and the 61.8% retracement. So if Fiverr is above 138 with 152 being a tighter stop, then this is a big old wave three in progress. The length of wave one placed at the wave two low will take Fiverr all the way to 469. Okay, and that sounds crazy, but if that's the same length in time and price as wave one, then that's actually conservative, because generally wave three is a lot stronger and a lot faster than wave one. So this is a wave one and a wave two. The length of wave one in time and price placed at the wave two low gives kind of a conservative estimate actually for what a wave three would look like. In my opinion, if Fiverr is above 138 to 152, the multi-year target for wave three is 469. Believe it or not, that wouldn't be the top. That would be the shallow, actually conservative wave three target before we had a wave four that very conservatively will retest the wave one high before yet another wave five that will be once again the length of wave one placed at the wave four low. That means that all in all, Fiverr could go on a waves 1, 2, 3, 4, and 5 rally that takes it all the way to 650 in the longer term cycles. So if it's above 138 to 152, Fiverr is one of those that may point to a longer, larger outperformance of kind of the growth sector that we could probably be anticipating in the future if things start to get a little too bullish. Let's look at TWLO and Okta. I just think this sector is breaking out. This is the TWLO count. I've been focusing on this a lot because I think it's getting ready to go. This is a wave one and an ABC correction wave two. We predict this rally to 444 that ends up being another wave one and another wave two. I think this is another wave one and another wave two. So the price targets are actually based on this red count right here. The length of wave one placed at the wave two low will conservatively take TWLO to 514. Okay, that's important to note because from this low, we form another wave one and another wave two. So the wave three target, just in the smaller degree, would be the 161.8% extension. And that would actually take TWLO off the chart. So that would actually take TWLO higher than what we can actually visibly see right now. So that's why 500 is a very conservative target for this red wave three, because the negative or the 161.8% extension would actually take TWLO off the chart. So I'm using the red count right now. The length of wave one placed at the wave two low gives a minimum wave three target of 500 before we have a shallow wave four correction and a wave five much higher. So I think TWLO 500 is very conservative, and I'm honestly looking for 500 in the first quarter pretty conservatively before a shallow wave four and a wave five that takes TWLO much higher. But I like the idea of trading against the low of 306. Notice how that was about $1 away from the 78.6% retracement. That's almost uncannier than what we're about to go over later in this video. We've seen some pretty uncanny reactions at the 78.6% retracement recently. But anyway, TWLO looks really good. Okta looks really good. I mean, and even from a classical perspective, we've kind of just been forming a massive base, which some may call a huge bull flag, that's been being accumulated for a long time. It's certainly in an uptrend. I think this looks good. The wave theory is incredible on this one. If we're above 275, that's the invalidation level. 304 is a little tight of a stop. We're going to fly for TWLO. 500 is very conservative. Okta is another one that just looks like Nest, I don't want to say it, it's a little inappropriate, but this looks like Nest visually. This looks visually very appealing to me. Okay, let's just say that. This is a wave one and a wave two. This is a 1, 2, 3, 4, 5 wave one. This is an ABC wave two. And yeah, I think this is another wave one and another wave two. That means the length of this wave one rally in red placed at this wave two low, just like TWLO, gives a very conservative wave three target of 308. Now, I think Okta is going to fly past 308. And one of the biggest reasons is because even from this low on 3.5, it looks like we form another wave one and another wave two. So if Okta is above 209, maybe 223 is a little tighter of a stop, it's actually going to go a lot further than 308. The reason I say that is because if we zoom out for a little bit, then we can see kind of just like TWLO, how we go off the chart for this target. You can't even see what would be the 161.8% extension of wave one. That's why I keep zooming out, but I don't think we're going to be able to see it. Let me see if I turn on the 161. Yeah, we can't even see it. It goes off the chart. So 308, 322, that's actually an extremely conservative target for Okta. I think we see the 300s by the end of the year, and I think we see a lot further than that in the future. I honestly can't give what would be the most accurate wave 3 target because it literally goes off the chart. This is a huge nest for Okta. The 300s is very conservative, but what will happen when we're above 300 is we will know factually that this is a huge base, that this stock has been being accumulated for well over a year, and that the institutions have big plans for it in the long term. So I think Okta looks incredible. I think the 300s is just going to be ridiculously conservative. We might be using TWLO and some of these other names in the software sector to get a more realistic target. Or we might just have to see how the Okta count plays out. Here's Zoom. Okay, Zoom's looking nice. It's a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2. So, you know, Zoom's lagging the software sector right now. Okay, it's by design that you're much more interested in Cloudflare at 160 than you are Zoom at 260, okay? That's by design. You're supposed to be asking about Cloudflare instead of Fastly, okay? That's what the market makers want. This is a 1, 2, 3, 4, 5 wave 1 and an ABC correction ends wave 2. This is the first time in the past year that Zoom has been at the 61.8% retracement of this rally on the all-time chart. So what this could be is that this is a big old wave 1. That's a big old wave 2. The length of wave 1 placed at the wave 2 low. Yeah, it sounds ridiculous, but the wave 3 minimum target is 780. That's more than triple the current price. So yeah, if Zoom was going to explode to a minimum target that was triple the current price, they were going to make that difficult, okay? They were going to wear you out, but all this really is a clear impulse and now a 61.8% retracement. So what do we expect? We expect that the length of this rally, at least placed at this low, will give a minimum conservative target of 780. That could be hit next year. But in the longer term, I think Zoom is very interesting. It's a wave 1 and a wave 2. So 780 is actually the conservative wave 3 target of a shallow wave 4 that I generally say will conservatively retest the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. Zoom could be going into 1,100, 1,110 in the longer term cycles, and that would all just be 1, 2, 3, 4, 5 waves that would subdivide into a large degree wave 1. So Zoom, Fastly were so early into their life cycle that investors will be very rewarded if they're right. Of course, they're also taking a bigger risk as well. So Zoom, Fastly, I just like them a little more than Cloudflare because Cloudflare's already exploded, okay? Zoom and Fastly, I believe they're next in the rotation. We're going to see laggards in the software sector, you know, really get some money, okay? This is Palantir. It's a 1, 2, 3, 4, 5 wave 1 and an ABC correction ends wave 2. And then it just keeps going 1, 2, 1, 2. I think this is a wave 3 of wave 3 of a wave 3 in progress. So let's just talk about the largest degree right now. What's the largest degree wave 3 target and expectation for Palantir? Is that this is a big old wave 1. So the length of wave 1 placed at the wave 2 low will take Palantir on a wave 3 to about 53. That's the wave 3 kind of textbook target. It's looking pretty good. I think we're forming what I would consider a nest. This is another wave 1 and another wave 2 from this low. So Palantir is within wave 3 of wave 3. If it's above 20, it's within a large wave 3 if it's above 17. So 17 to 20 is the stop and invalidation zone. I think the minimum wave 3 target is the 161.8% extension, which is 33. It looks like we're kind of building up energy to go beyond that. We'll have from 33, which will likely go past a shallow wave 4 correction before a wave 5 higher. So just within the cycle from this low, in the pretty short term, waves 1, 2, 3, 4, and 5 should take Palantir above 40. In the longer term cycles, it says that's going to be conservative. Palantir will likely go all the way to 50. And I think from this low even, we have another small wave 1 and a small wave 2. So this could be a big wave 3 of wave 3 breakout. Looking to see Palantir in the upper 30s, you know, the upper 40s, pretty conservatively by the end of the year, I think. But the larger degree count, to 53 is still very much intact. What would happen from 53? Well, you guessed it, that would be the conservative wave 3 target. We'd have a shallow wave 4 correction that will conservatively retest the wave 1 high, then the length of wave 1, place at the wave 4 low. It could take Palantir as high as 80. That's a little ridiculous to talk about now, but that's what the long-term 1, 2, 3, 4, and 5 waves target would be for Palantir. So there's a lot of upside, if you're above 20 to 17 for Fastly, for Zoom and for Palantir, all three of these kind of recently IPO'd software stocks, they could be a lot more risky, but they could also provide a much bigger reward in the future in the software sector. Here's Teradyne, here's Bio-Nanogenomics. These aren't software stocks, but they're still Cathie Wood stocks, and they look very good. This is a wave 1 and a wave 2, a huge wave 3 that is cleanly subdivided into 1, 2, 3, 4, 5 waves, and we have an ABC correction that's ending a wave 4 right at the 38.2% retracement. So if Teradyne, ticker symbol TER, is above 95, I think the length of wave 3 placed at the wave 4 low will take it on a wave 5 higher to 211. Now this whole rally is from 316 to about February of 2021. So a 1-year price target, in my opinion, is appropriate. If we're above 95, the length of wave 3 placed at the wave 4 low gives a wave 5 target of 211 in the next year for Teradyne. Let's just do ROKU right now. It wouldn't be a Cathie Wood video if we didn't do ROKU. I know I talk about it a lot, but let's just brush up, because it's a big holding of ARK, so it's important to talk about ROKU. The aggressive view for ROKU is that this is a wave 1 and a wave 2 on the all-time chart, and this is another wave 1 and another wave 2. So just like kind of Tesla, just like a lot of stocks we talked about, the length of wave 1 placed at the wave 2 low would take ROKU as high as 707 before we have a shallow wave 4 correction and go on a wave 5 higher. So that's the very aggressive view. What's the more conservative view? The more conservative view that may be just as accurate, we're at the 50% retracement. When you wick at the 50% retracement, it's either going to be a wave 5 or a wave 3. You really don't know until you go past the wave 5 target. But if this is a wave 5, in my opinion, the length of wave 3 placed at the wave 4 low is going to take ROKU to 707. And I think, just look at this. This is a huge wave 1 and a big old wave 2. So even on the smaller degree, this tells me that ROKU is getting ready for a monster wave 3. And that's kind of leading me to believe that 707 is going to be too conservative. And that means this count is going to be too conservative. ROKU is probably within wave 3 of wave 3, 707. Very early in 2022, very early in 2022, maybe a too conservative estimate for ROKU. It's looking pretty good. So we'll talk about ROKU. Let's talk about Bio-Nanogenomics. I want to talk about one of these smaller cap names. I think most people would realize that a stock that's $5 is pretty damn risky. I talked about Bio-Nanogenomics here. It had a 45% rally, and then it kind of faded. I think that this is a wave 1 and a wave 2. We're above the 78.6% retracement. This has seen a lot of activity in the options market. It's seen some pretty interesting news, a big old acquisition. So I'm not trading the fundamentals, but when a stock is really coiling like this, in my opinion, it's forming a nest. It's on the bar chart straddle and strangle screener, and then it announces a huge acquisition. That you kind of put 2 and 2 together. It doesn't mean that I think Bio-Nanogenomics will go up because it has this big acquisition news, but I do think it's evidence that we're going to break out of this range and move in a direction. In my opinion, that direction is going to be to the upside. So BNGO, 1, 2, 3, 4, 5, wave 1, ABC correction, wave 2, wave 1, wave 2. We're going to explode into wave 3 of a wave 3. The longer term count would be a wave 1 placed at the wave 2 low. Yeah, it sounds ridiculous. That could take Bio-Nanogenomics up to 20 before a shallow wave 4 correction and a wave 5 higher. So that's almost a 400% upside without option expiration risk. Okay, so that's got to have a little bit of room. Extremely tight would be this low of 4.30. I think the 78.6% retracement of 3.69 is the most reasonable invalidation level. I think one thing that might actually be a little helpful is turning on Trend Spotter and just saying, okay, the next time Trend Spotter flips to green, I'm going to take that chance. That might just be, one way to go about it, in my own professional opinion. We can see what happened the last time, Trend Spotter flipped to green. We had a little bit of a whipsaw, but then before that, the last Trend Spotter indicator on the daily chart preceded just an incalculable percentage rally. So that might be helpful for Bio-Nanogenomics. let's transition into crypto. I'm going to touch on crypto in this video. It's kind of a growth sector. I'm not sure how much crypto Cathie Wood owns. But before we do that, I want to talk about the idea just in general. I touched on this in my last video, that we will see smaller cap companies outperform larger cap companies on a relative basis. So just like TAN outperforming SPY, like we talked about early in this video, I think IWC, the microcap ETF, is going to outperform SPY on the larger degree. All this really means to me is that this is IWC as a ratio to the S&P 500. And what this shows us is that from, this low to this high, for about a year, IWC was outperforming the S&P 500, okay? And then at this peak in early March, right before the quarter switches, right before the March quad witching, all of a sudden the microcaps began to underperform the S&P 500. I think what we could see is that this September rotation, very similar to last September in 2020's rotation, is a shift into kind of the smaller names, and we should see that the microcap ETF outperforms the large cap ETF, and that should mean that smaller companies in general, whether they're in the growth sector or the industrial sector, will generally outperform their larger cap components. So some might call this the dash for trash. But anyway, I'm not going to call any of these companies trash, but this is crypto. Let's talk about crypto real quick. It's pretty important to talk about crypto, especially when we're talking about all these growth names. A lot of these growth names have an association with crypto. Square Cash and PayPal, they're not necessarily highly correlated, but I'm pretty sure that Square Cash and PayPal, they have a little bit of crypto in their holdings. Don't quote me on that. I'm not a fundamental person, but this is a 1, 2, 3, 4, 5 huge wave 1 for Bitcoin, then an ABC correction that ends wave 2 between the 50 and 61.8% retracement. And in my opinion, this is a big old wave 2 that's ended. So if we took the entire length of wave 1 and we placed it at the wave 2 low, that's going to mean the minimum, and I keep stressing the word minimum, wave 3 target is 90K before a shallow wave 4 correction that will conservatively retest the wave 1 high and a wave 5 that is at least the length of wave 1 placed at the wave 4 low. So yes, this sounds wild, but Bitcoin going to 125,000 is conservative. So just like Cloudflare, please don't spam my post about Bitcoin when it's above 150K. Okay, if you're not interested in Bitcoin at the 30K range and the 40K range, I'm not sure why you would be interested in it at the 150K range. And that's why I think we're very safely going, especially if we're above 39K. Bitcoin looks good. I want to talk about some other kind of smaller names, maybe more associated with Bitcoin. This is Ripple. I haven't talked about Ripple in a little bit. The last time I really talked about Ripple was actually right here in December, before it sextupled. What's that called when you go 600%? But anyway, this is a huge wave 1 for Ripple and an ABC correction ending a wave 2 on the larger degree, right? And we've seen basically every single cryptocurrency break above this high from 2017, 2018. I think Ripple's next. I think that, we may have seen some of these bigger corrections in the broad crypto sphere were a rotation potentially into Ripple. But anyway, this is a wave 1 and a wave 2. And then for Ripple, I think this is another wave 1 and another wave 2. So it's getting a little tight. The original stop was around 18 cents. Maybe we can move that up to 50 cents and say that that's a wave 1 and a wave 2. The larger degree wave 3 target is the median of this Andrews pitchfork, which we can see right now is conservatively going to take Ripple to 3.50. I think this is a wave 1 and a wave 2 on the smaller degree. And if that's really a wave 2 correction, then Ripple's within a wave 3 of a wave 3 right now, and it is getting ready to fly. So in this video, I want to talk about some of these smaller names. Crypto, we've got some names besides Bitcoin and Ethereum I'd like to talk about. Here's Binance Coin. This is a pretty chart. I like this one. It's a very quick impulse. This whole impulse is from October 30th to May 11th, right? This is a pretty fast rally. This is 7 months, and this is a 1, 2, 3, 4, 5 wave 1. A lot of people don't realize how quick crypto can sneak up, but this is a huge wave 1 in my opinion. Now an ABC correction ends wave 2. So for Binance Coin, ticker symbol BNB USD, the length of wave 1 placed at the wave 2 low that ended at exactly the 61.8% retracement should take BNB all the way to 874. Yes, that is almost double the current value. I think that could happen in the next year. The invalidation level, in my opinion, it's going to be a little wide. The true invalidation level is this wave 2 low. of about 212. That's a little far. We could probably move that up a little bit. Count this with Ethereum, count this with Bitcoin. Why would that be helpful? Well, Bitcoin's already above this relative wave one high. We kind of already know that Binance Coin is going to break above that wave one high as well on the smaller degree. So I think BNB holds above 320 and it's going to blow up out of this. So 320 might be a little tight of a stop. It seems wide, but this is crypto. So the higher the price target, the wider the stop. If we're above about 320, I think that this is going to go to 874. I think that pretty conservatively is going to happen in 2022. It will probably happen, honestly, in the first half of 2022. You know, just looking at how these crypto charts are playing out. I want to talk about Marathon Patent Group real quick. Nothing too much to update, but on the smaller degree count, we're starting to look good. I think we came within less than 10 cents of breaking above this high. For Marathon Patent Group, no matter how you count the larger degree, this is a pretty clear ABC correction from this high. So this is a wave one and a wave two from the May low. And in my opinion, this is another wave one and another wave two from the May low that ended between this 50 and 61.8% retracement. So if Mara is above about 29 to 30, then it's within a wave three of a larger degree wave three. The next target is 60 before a shallow wave four correction and a wave five. This is looking really good. I'm gonna have a field day on FinTwit if we get Marathon Patent Group above 57, because some people were talking some SHIT about that. But anyway, I'm not here for the trolls. I don't care about the trolls. But when people say, you know, when people talk about a stock that I've talked about that's already exploded after it's exploded beyond my price target, you know, that's just a little rude. I don't know, man. But anyway, Marathon Patent Group looks great. It's going to explode to 60 before a shallow wave 4 correction and a wave 5 higher. People thought 75 was ridiculous. 75 is not ridiculous. The length of wave 1 placed with wave 2 low says 60 is a conservative wave 3 target at the 161.8% retracement before a shallow wave 4 and a wave 5 that's at least the length of wave 1 placed at the wave 4 low. We're going to see Marathon Patent Group hit 80 just within the cycle from the 720 low. So we got a lot of upside for Marathon Patent Group. Let's talk about one more stock. I've never talked about this stock before, but it's basically just another one of those crypto mining names. This is HUT, H-U-T, not Pizza Hut, HUT, the Bitcoin mining stocks. This is a huge wave 1 and an ABC correction that ended a wave 2 at exactly the 78.6% retracement. I think this is a massive wave 3 in progress. It's probably dangerous to chase HUT here. It could be another wave 1 and another wave 2. So maybe a stop below, 7.50 this low wouldn't be the worst trade in the world. I think it's a little dangerous to chase HUT, but I think this is a phenomenal template for crypto right now, because if you take this Andrews pitchfork and you connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, the next minimum wave 3 target is going to take HUT to the median of this pitchfork, and we can see right now that's going to be at least above 15. So it's got a lot more upside, almost 50 or 60% more upside just completing wave 3. We could go a lot further than that, but I think the median of this pitchfork for HUT is a very safe target to hold out for, and I think a lot of crypto is really going to catch people off guard. If we start seeing things fly, maybe HUT getting to the median of this pitchfork is going to let us know that we're getting close to taking some profit. And that's going to be in the short term. In the longer term, though, I really think Ripple going to the median of this Andrews pitchfork is going to be the best indicator of maybe when the crypto music will stop playing in the longer term cycles. And I imagine that if Ripple goes all the way to $350, $4, that Bitcoin would be a lot higher than 125K by then.